American shale producers turned the U.S. into the world's top oil producer, at one point pumping out 13 million barrels per day, giving the United States a key edge in the competitive global energy market. But a downward trend in shale production paired with the coronavirus pandemic has sapped global demand for oil, leading shale companies to shut off a number of wells, many of which may never come back online.
We believe that the historic and prolific oil production growth by U.S. shale may have been forever altered.
It's not completely uncommon for producers to implement individual well shut-ins for days or weeks at a time to deal with a maintenance problem or to scale back production when oil prices are low. But the current rate of shale shut-ins has been happening on an unprecedented level as U.S. producers rush to slash production after the coronavirus pandemic evaporated global oil demand. Financial analysts at S&P Global have dubbed the current trend of well shutdowns as the Great Shale Shut-in. Scores of shale oil producers pumped the brakes on production when oil prices dipped into negative territory in April. ConocoPhillips, ExxonMobil, Chevron, and EOG Resources all cut back production by hundreds of thousands of barrels per day. IHS market analysts estimate shale production cuts would hit 1.75 million barrels per day. As oil prices rebound, some producers are looking to tap into wells once again. But bringing shale facilities back online isn't as easy as flipping a switch. Wells can suffer permanent damage and longer shutdowns. But there's another danger to lengthy shale shut-ins. The appetite for financing may also dry up. Because shale oil wells decline quickly, companies must keep drilling new wells just to keep output levels consistent. During the boom years of shale stocks, banks were more than happy to offer loans. But that's changing now.
Will money pour back into the sector? It's a very, very capital-intensive sector, and we don't think that's going to be the case.
The cash crunch has already made some producers vulnerable to financial insolvency. In April, Whiting Petroleum filed for bankruptcy, and shale drilling pioneer Chesapeake Energy became the largest oil and gas company to file for Chapter 11 bankruptcy in June.